Good morning everyone and welcome to Moneycontrol live stream. You're watching the opening bell and I'm Santosh Nair. Well, all eyes will be on the RBI's monetary policy decision today, and rate sensitive are expected to be in focus ahead of the RBI policy. Also, cement stocks could see some action today, with the finance minister indicating that the 28% GST on cement could be reduced considering that fuel prices have stabilized. Also in focus will be companies like Shree Cement, Adani Power, Adani Wilmar, Cummins India and Escorts, which will be reporting their third quarter earnings today. A quick look at the market setup this morning. The SGX Nifty futures are indicating a positive start for the Nifty and Sensex this morning. Last evening, US markets rallied after the Fed said that inflation was on the decline. However, the Fed has cautioned of more rate hikes if the labor market remains strong and inflation continues to remain high. Already we've been seeing a lot of strength in the labor market as seen from the latest non-farm payroll reading. Meanwhile, FIIs continue to be net sellers of Indian equities. On Tuesday, again they sold shares of about 2,500 crore in the cash segment. In cues from the derivatives market, we are seeing build-up of long position in futures of Navin Fluorine and ABB, whereas short covering of positions was seen in futures of Adani Enterprises, Adani Ports and Petronet LNG. Besides that, some short positions are being built up in LIC Housing Finance, Deepak Nitrite and Motherson Sumi. And over to the newsmakers, the stocks that are likely to be in the limelight. Navin Fluorine company reported its third quarter earnings yesterday. Now, net profit up by close to 55% at 106 crore. Revenues were up by close to 49%. Operating profit up around 58% and margins also showed good strength at 27.6% compared to 26% during the same period last year. Now, Navin Fluorine has been among the few stocks in the chemical space which have been doing well of late. It's risen close to about 10% in the last couple of weeks. So, some bit of buying could have been in anticipation of strong quarterly numbers. We'll have to see if it sustains. However, the stock is not too far from its 52-week high of 4,800 rupees. Deepak Nitrite reported a disappointing set of numbers. Net profit was down by about 14%. Revenues were up by about close to 16%. However, operating profit fell by about 11% and margins were also under pressure. They came in at 15.8% compared to 20.4% during the same period last year. Now, this stock again has been under pressure over the last couple of months, falling close to about 20%. Yesterday also there were build-up of short positions, probably in anticipation of weak numbers. Barbecue Nations Hospitality reported its third quarter numbers yesterday. Sharp decline in net profit, down by about 54% year on year. Revenues rose by about 14.5% to 328 crores, but again operating numbers were weak. Operating profit was down by about 5.6%, whereas operating margins also declined by close to 4 percentage points. They have come in at 18.9%. The stock has fallen around 33% over the last 6 months. BSE Limited net profit down by about 18.7% to 47.6 crore. Slight increase in revenues there, up by about 6% to 204 crore. But again, like in the case of Deepak Nitrite, disappointment as far as the operating numbers go. EBITDA was down by 32.4%. Margins also under severe pressure. They fell almost 10 percentage points from 29.9% to about 19.1%. The company's board has approved a stake sale of 2.5% in CDSL through offer for sale. BSE India shares have been under pressure over the last 6 months now. Wonderla Holidays reported a sharp increase in its net profits. Quarterly net profit came in at 38.9 crore. That's almost a 9-fold jump over the same period last year. Revenues also almost trebled to about 113.2 crores. Operating profits also jumped very sharply, almost 4-fold, whereas margins were also up sharply. They came in at 49.9% versus 29.5% during the same period last year. Blue Star has said that the company detected cyber attack at certain locations. However, it has said that there has been no material impact on operations due to the incident. Moving on to the brokerage pick of this morning, Macquarie has upgraded Paytm. It's a double upgrade to outperform. Target has been raised from 450 to 800 rupees. Macquarie has lowered its loss per share estimate for between FY23 to FY25 by 18 to 72%. Let's take a quick check on the market before we get back to stocks. And as expected, indices have opened on a firm note. The Nifty is up by 40 points in early trade. The Sensex is up by 108 points. Market breadth also very positive. 1,300 stocks are trading higher on the NSE compared to a little over 400 stocks that are down. Among the key gainers in early trade, Adani Ports is up by about 4%. Infosys is up by close to about 1%. ACC is up by about 1.2% and Ambuja is up by close to about 2%. Getting back to the brokerage bet, according to Macquarie, the biggest surprise has come in the distribution business, control of cashbacks and also a reduction in operating expenses. And Macquarie sees a very visible change in the approach of the management to deliver profit and has raised its revenue forecast for FY23 to FY26 by between 33 to 51%. And moving over to the stocks in focus this morning, Bharti Airtel revenues were up 5%, operating profits up 5%, whereas net profit was down by about 26%. Now, mixed views from analysts on the company's numbers. Among those positive on the stock include Morgan Stanley and CLSA. And the key positives in Bharti's third quarter numbers were a strong 4G net addition, lower subscriber churn. Also, the margin in the India business, barring its digital TV segment, were pretty good, and also operating cash flows were good, whereas the net debt was in line with what most analysts were expecting, according to Morgan Stanley. CLSA has raised estimates for FY24-25 by between 3 to 9%. However, JP Morgan is bearish on Bharti Airtel, and it has said that higher 5G capex, lack of tariff hikes and deflation in premium ARPU, that is average realization per user, will drive down the return on invested capital. JP Morgan also feels that the 4G prepaid hikes may not be good enough to boost ARPU. Hero Motocorp reported better than expected third quarter net profit, largely due to a surprise in the gross margin, according to analysts tracking the company. Key positive includes the company seeing a revival in market share because of new launches. Also, Citi feels that the company's margins could improve further from here on because of cost reduction initiatives. Citi has also increased its target price for the stock and said that volumes could see an uptick if rural demand revives due to better rabi harvest. Ambuja Cement is the last stock on our watch list. The Q3 earnings better than expected, largely because the company was able to control its cost. Also, company has now significantly bridged the gap on EBITDA per ton with Ultratech during Q3, according to Jefferies. Jefferies has also cautioned one negative about Ambuja Cements, which is that the balance sheet appears to have deteriorated, which is a negative. Now, Ambuja Cements has been in the F&O ban list. This was one stock to which institutional investors had good exposure. Stock saw a lot of unwinding of positions last week, but has been steadily inching up over the last couple of sessions. Well, that's all that we have in this episode of Opening Bell. Thank you for watching, and we'll be back with you again at 3:30 p.m. In the meantime, for all news, views and analysis, stay logged on to moneycontrol.com.